You must have heard the news of Chinese authorities troubling Jack Ma, tech stock prices falling steeply, new rules striking the education sector hard, and a number of big companies under investigation in China. What's going on, and why the Chinese tech companies are facing lash from the authorities? Chinese government has been taking a toll on giant tech companies since last year. Major tech companies are under serious investigation and hefty fines have been imposed on those not in line with Xi Jinping's vision. But why would any country trouble these tech companies having major contribution towards country's growth? What is the vision here? How is it affecting the country's economy and the firms involved? And at last, why now? Let's dig deeper and find out what's going on in the second largest economy of the world. In November last year, the IPO of the Ant Group owned by billionaire Jack Ma was suspended just because of the comments he made about Chinese financial regulatory bodies being outdated and banks being pawn shops. This was the first among many bombs Xi and his government were about to drop on the tech giants. Didi Global, the leading cab service provider, was caught under the radar and was accused of gathering and storing huge amounts of data, including phone calls and chats, illegally. Just 1 week after the company was listed in the US stock exchange, the app was removed from the Chinese app stores. Tencent, which controls more than 80% of China's exclusive music streaming rights, was fined heavily for unfair practices in the online music market. In the edtech sector, the government ordered the tutoring services to be run as non-profit organizations and has banned the companies from capital raising and foreign ownerships, and have also forbid teaching during weekends and public holidays. There are three very competing reasons as for why China is slashing these tech firms. The first one, Xi's government wants to exercise control over the monopolistic firms. They want control over how much these firms can expand and build up capital. Basically, the government is against the disorderly expansion of capital in the country. China has a vision for using data as a fifth factor of production after land, labor, technology, and capital being the traditional four. Crackdown forces these companies, which are reluctant to share their data with budding startups, to do so. Secondly, the government wants to lower the burden of after school tutoring cost on the families, which was becoming essential to get good score in China's college entrance exam. The high education cost and the resulting pressure on parents is resulting in declining the fertility rate of the country. Notably, China has relaxed family laws in the past, and the current condition of ed sector was doing the job of neutralizing their attempt to maintain quality population growth. Lastly, China wants to divert its resources from soft tech like e-commerce to hard tech like advanced manufacturing, artificial intelligence, and chips. A common saying is getting popular nowadays that US billionaires are going to space while China's billionaires are going to grocery shops. She also wants his capital filled resources to focus on the technologies of the future. The effects of the crackdown in short term are seen to be disastrous by many. SoftBank said that it won't be investing in Chinese startups in the near future. I mean, why would you invest in a company whose future is so unpredictable pertaining to such extreme policies being enforced unforeseeably? Investors all around the world also started to pull back from investing in the targeted giant firms. Didi's share price has fallen by more than 40% since its listing. The growth of its customer base has stopped, and so has the profits. Jack Ma is forced to pay a record $2.8 billion fine enforced by the officials. The education sector stocks have fallen by more than 30% in just two trading sessions after the rules came out. The targeted companies have lost more than $1 trillion in combined market cap. Yes, that's right, $1 trillion, which by the way is more than GDP of 195 out of 213 countries. Owing to the crackdown on these tech companies, even the startups are now struggling to get fundings. The gap between the funding compared to the US has increased substantially. But why now? Why Xi's government is cracking down on the techs now? China is a socialist country and it's expected from them to have a near equal wealth distribution. By killing these monopolies in the market, they plan to reduce the inequality. They plan to cultivate more and more tech startups even in tier 2 and tier 3 cities. This gives Xi's government a strong point to put forward in the cabinet reshuffle of 2022 that his government favors the information and capital in the sector to be spread evenly and not just remain concentrated and limited to a few tycoons. Even though the giants like Didi Global and Alibaba feeds thousands of employees by their business, the Xi's Communist Party was careful to portray the move to be anti-monopoly and not anti-employee. The party has also announced that this crackdown is not going to end anytime soon. It will continue to form strict rules and regulations in order to achieve what they have planned, which is believed to be good for the country's economic future, at least by the government. It is quite clear that China does not fear the short term consequences of its actions. It's only the autocracy that Xi Jinping enjoys, which allows him to bring into effect these kinds of aggressive moves that cannot be put forward by democratic governments. So, what do you think about this crackdown? Do you think these long term goals are achievable? And are these goals worth the adverse short term consequences? Please let us know in the comments and don't forget to like, share, and subscribe if you liked our analysis.